Good day, everyone. I'm back again. So today, I want to give you guys a brief on my strategy. Basically, what I look out for before I enter a trade or what I see in the market. So, with this example, I stopped trading Gbpjpy for 4 months now, but now I traded Gbpjpy basically the whole of last year, and now I want to be back on Gbpjpy. I want to let go of all other pairs. So that was why I had this little test here, this analysis. I didn't trade it. I was basically just testing out to understand if price still moves the same way on this pair. So this setup, I'm going to drop the before and after. There's the before the analysis later on here. But I just want to run you guys through how I was able to get this setup. So if you notice, price was making a series of higher highs, higher lows, higher highs, higher lows. So basically, price was on an uptrend, higher highs, higher lows, higher highs, higher lows. So that is what you consider an uptrend. And what I look out for is market structure shifts, and then I find liquidity and then point of interest. So if you notice, market was on an up, higher highs, higher lows, higher highs, higher lows. All of a sudden, it changed character and it made a lower low here. That signifies that price is about to change directions. It's no longer going to continue going on an uptrend. It's going to change directions to a downtrend. So it changed character here, or it shifted structure. And then after it shifted structure, it's pulled back up. That place that it pulled back to is what I take as my liquidity. That is what I call inducement. Basically, the first pullback after a break of structure or after a shift in market structure. That is what you call inducement. That's what I use as my liquidity. So I'm going to mark it out here as inducement. So basically, I now have my market structure shifts. That's the first thing. The place price shifted structure from the normal order flow. So it was on an uptrend before. It changed character to a downtrend, meaning that instead of making higher highs and higher lows, it changed character and made a lower low instead of a higher high, or instead of a higher low. So I've marked out the inducement. That's the first pullback after the break of structure. That's what I'm going to use as my liquidity. And then I'm also going to mark where price shifted structure. That is here. So this is my shift in market structure. I'm going to demarcate it with MSS. That is market structure shifts. So now I have my structure, I have my liquidity, and now it's time to mark out my point of interest. That is being the other block that triggered the shift in market structure. So now price was on an uptrend, it shifted structure to a downtrend, meaning that instead of making higher highs and higher lows, it shifted structure or it changed character, whatever, and then made a lower low. So now I'm going to mark out the other block that triggered the shift of market structure. This is the other block. So I'm going to demarcate it with other block. So that's the other block that triggered the shift of market structure. So what I did now was wait for price to basically pull back, sweep the liquidity, that is break that inducement zone, tap into that other block, and then continue selling, because now it's already changed character from an uptrend to a downtrend. So my first take profit is that draw on liquidity down there, which it has already hit. That's TP1. My TP2 is that breaker block down there. So you understand, the system is actually very simple. Identify the market structure or the trend or the order flow. Wait for price to shift, movement or change character. You mark out the liquidity, that is the pullback after the shift in market structure. Then find the point of interest that triggered the shift of market structure. So you see, I have my market structure shifts, I have my inducement, and I have my other block that triggered the shift of market structure. It's actually very, very simple. So this was the before when I made the analysis. This was the fresh sheet and everything. This was the before after I made the analysis, and this here is the current play out. Now remember, it's very, very easy, simple, but you have to be very precise with your analysis. Find the market trend, the structure, find the shift in market structure, find your liquidity zones, and then get the other block that triggered the shift of market structure. Make sure that your other block triggered a shift of market structure and it has liquidity protecting it. That's when it's valid. It has to trigger a shift of market structure and it has to have liquidity protecting it.